All right, well, a lot of stocks are getting mutilated right about now, and a lot of them are these pre-revenue stocks, these stocks that are not profitable yet. And one of them that I don't really see a whole lot of people talking about, well, actually, believe it or not, I don't really watch a whole lot of YouTube anymore, so who knows? Maybe everybody's talking about this one, and I just haven't seen anything yet. But in case nobody is talking about this one is called Curiosity Stream, ticker symbol CURI. I really like this company long term. I bought a little bit of this company back when it fell below 10 in May, and I was hoping to buy some more, but then it bounced rather quickly. So I just kind of held off on buying any more shares. It's just kind of been going sideways, but now it is rolling over again and is all the way under $7.50. So I am buying it some more. I think this is a rather underrated company, rather underappreciated company, especially when a lot of these companies that are pre-revenue, you see a whole bunch of them getting a lot more hype. But this one is only worth 413 million, or at least by market cap right now. So it's really, really small. I think there's a ton of potential in this company. And, if we scroll down, take a look at some of the future numbers. These are the revenue numbers. In 2018, they made less than $10 million, but you can see by next year, they are projected to go all the way up to 122 million. And this year, they're estimated to make almost 71 million. So you can see they are growing very rapidly. And, we go down to their earnings per share. We can see on an earnings per share basis, they are going to be profitable most likely by 2023. So really only about one more year of negative returns, and then hopefully 2023 you're going to have some profits coming in. And one of the things that I really like about this company is actually several things, not only their product, but one thing that I really like about it is their owner or their founder, and a lot of the insiders are putting their money where their mouth is. Look how much insider ownership there is in this company. There's over 54% right now, so just tons and tons of insider ownership. Institutions own another 24%, and then the public only owns about another 21% after that. So there's a lot of institutional ownership and a lot of insider ownership, and I like it when they are eating what they cook. And if we go down here to look at some of their other numbers, some of their balance sheets numbers, you can see that they have 80 million in cash. Not a huge number, but this is a nice number. 0 in debt. So the fact they don't have any debt going forward when money could get tight, that's going to be a huge bonus for this company. And there was actually a really interesting article on this company on Seeking Alpha. And actually, let's go to that article right now. All right, so let's jump over to this article on Seeking Alpha, and let's see what they had to say. And spoiler alert, I agree with pretty much all of it. That's why I'm putting it in the video. But anyway, it starts off with saying that Curiosity Stream is emulating the success of Netflix. And the summary says that Curiosity Stream's revenue have been growing rapidly, are very predictable, and are diversified into several different customer groups. He says that I believe the company will be able to emulate the success of Netflix by growing at a similar pace and achieving similar profit margins. He says, using a very conservative assumption, I'll show that investors can expect at least a 190% return over the next 5 years. I do think that is conservative. And he says, in an even more bullish scenario, the stock price could increase 600% to 1,400% over the next 5 years. And I definitely think that is doable. The company is worth about well, it's going down by the second, so it's worth about 400 million right now as far as the market cap goes. And I could easily see this company being worth between 4 and 8 billion over the next 5, 6, 7 years. So I definitely agree with that potential increase in the share price. But scrolling down, he says, Curiosity Stream has been growing with a compounded annual growth rate of around 100% over the past few years. By comparing the company's possible future to how Netflix looks today, it becomes apparent that down the road, Curiosity Stream has good chances to end up with healthy profit margins. He says he'll, make a few points, but he says with the current market cap around 450 million, it is lower than that right now. I believe the company is moderately undervalued, and I certainly agree with that. Now, talking about the overview of the company, if you're not super familiar with CuriosityStream, CuriosityStream is an online provider of videos on demand that are covering topics in fields such as nature, science, technology, and history. The company is very similar to Netflix, but has found a very specific niche of factual entertainment content. Now, I think because they have the special niche, they're going to be able to sell this content to all those other providers. I think a lot of those other service providers are not going to want to create this type of content, so they're going to want to, contract it out, and that's where CuriosityStream, I think the real value lies in this company. But it also says what gives the company a lot of credibility is that it was founded by John Hendricks, the founder and ex-chairman of media giant Discovery. So this guy knows what he's doing, and he already has plenty of contacts in the industry. So I'm really, really happy that that guy is the one who founded it. That's another reason why I love this company. But it says, with its documentaries, the company targets 4 different groups of customers. The huge global market sizes for these 4 groups can be seen below. So direct to consumer goes to 75 billion, or is estimated at 75 billion. The bundled distribution is estimated at 189 billion. So that's where they sell the service to those other streaming providers like Netflix, Amazon, etc. The program sales, they estimate that 120 billion, and their sponsorships at 40 billion. So they're pretty diversified for a small company. But they say that, in this article, it says that the direct-to-consumer business works basically the same way as Netflix's core business, the only difference being the focus on a different type of content. But subscribers to CuriosityStream are able to watch this content library for only $20 a year. So you can see it's a very cheap service, and there is a lot of room in the future once they get a lot of people on this service to make little incremental increases. I mean, even raising this to $30 a year is a 50% increase, and $30 a year for most people is like nothing. I remember when I first got on Netflix's service, I think I was paying like $7.99 a month, and now it's like almost $20 a month. It might even be more than that now. I haven't checked the bill in so long, it's like I'm not even considering getting rid of the service, so it doesn't even bother me when they raise it a little bit every once in a while. And I think CuriosityStream is going to be able to do that same exact thing. But it says subscribers can watch CuriosityStream's documentaries on either its website or its app, and Curiosity's revenue from subscribers currently represent 49% of the company's total revenue. Now, the second way the company likes to make money, or is making money, is by being a part of a bigger bundle, like what I was talking about, selling it to other streaming services. Now, it says subscribers for Curiosity's partner can access Curiosity's content, and CuriosityStream receives a part of the subscription fee that the subscribers pay that other service provider. And this category generates 35% of its revenues. I'm going to scroll down a little bit. I don't need to read all of it, but I thought this was pretty important right here. It says Curiosity expects to grow all 4 categories over the next years, and due to their subscription model, a big part of these revenues is very predictable, and due to the 4 different revenue sources, the revenues are also very diversified for such a small company. Moreover, the 4 sources of revenue are complementary to each other. Revenues in either category raise awareness of other categories and might lead to additional revenues in these categories. For example, if a university buys subscriptions for its students after graduations, students might buy this service by themselves. So no additional marketing is necessary to acquire those customers. Or when customers buy a bundle from Curiosity's partners like Netflix or Amazon or whoever, they become aware of the CuriosityStream service, which basically provides CuriosityStream with free marketing. The content library also has global appeal and therefore makes it even easier for the company to scale globally. I think that is a very important point that he made as well. And this was actually surprising. I did not know this, but it says the content on the platform are documentaries that aim to be both entertaining as well as educational. Currently, the company only owns 1/3 of its content, while 2/3 of its content is licensed. Now, going forward, the company will go down a similar path as Netflix and start producing more content by itself. Now, based on a very low churn rate, which means how many users unsubscribe per month or per year, it can be said that the content is more than satisfactory to its users, meaning this is content that is very sticky. Once people are interested in it, they tend to stay interested in it. And it says, in May, the churn rates looked roughly like this for the most important service providers, with which you can see CuriosityStream was the absolute best. Had a monthly churn rate of 2.5%, Netflix 2.6%, Disney 4.5%, Hulu 4.9%, HBO Max 6.6%, and Apple TV all the way up at 12.7%. And you can see the annual churn rate, they are the best as well at 26%, Netflix at 27%, Disney at 42%, and so on for the other providers. So that is a very important part of the business. Is rather sticky, and once people subscribe to it, they tend to stay with it because that is something they are genuinely very interested in. Now, they talk about the earnings right here. It says, after a recent quarterly update, the stock dropped 8%. However, I actually believe the numbers looked very promising. The company grew 113% year over year from 8 million to 18 million and is now 100% certain that the fourth quarter can grow at least 138% from 11 million to 27 million. Now, also, without having mentioned the exact number, during the earnings call, the management stated that Q3 it experienced the lowest churn rate in the company's history, so that is even improving. It says, when they talk about the revenues over the last 5 years, let me see if I can situate this a little better. There we go. CuriosityStream is relatively small with annual revenues of 71 million in 2021. However, the company's past growth rates of 93%, 120%, and 79% for 2019, 2020, and 2021 show that there is a good chance the company will soon reach a much larger size. And you can see they went from 9 million to 18 million to 40 million to 71 million. So they are growing super fast. And if you scroll down to the revenue in millions, you can see that is projected to go all the way to 217 million by 2026. So they are projected to more than quadruple, or I should say right around quadruple their revenue, and their margins are expected to get better as well. So I think this company has a very bright future, but let's actually get into the chart, and I'll show you how nice it's looking from a chart perspective. All right, so let's jump into these charts and let me show you what I am doing with CuriosityStream. And by the way, all of this is just for entertainment purposes only. Please do all of your own research before buying anything you see in my videos. With that being said, I do have a Patreon group. The link is down there in the description. It's only $10 a month, so if you want to know what we are trading in real time, it is right down there. And if you don't mind liking the smash button, that helps out the channel as well. But my first purchase in CuriosityStream was when it had this big gap down. I think I bought just about maybe a little over $9 a share. Ended up going just a little bit lower down to about, actually bottomed out at 826. And then it had this sharp move up. Now I thought once it had this move up, it was probably going to hit this 8-period exponential moving average and then kind of roll back over again. But that did not happen. I only had a couple hundred shares, and I was waiting for it to pull back down to add to it, but it just took off. So I just put those shares away and slowly checked in on this every once in a while, and it just kind of started to fade down over these last couple of months, and now I finally started buying again. I'm actually getting in lower than I did way down here. I would love to be able to tuck away a couple thousand shares at least of this stock, for the next 5 or 6 years and just see how it plays out. I think this one has a ton of potential. Unfortunately, if you look at the chart right now, it is starting to accelerate to the downside, so we might end up getting a sharp bounce. This might be a short-lived, area where I could accumulate some shares. So I've been buying just a little bit more than probably I wanted to, but I think if this thing does end up bouncing and jumping up over 10, I want to have a decent lot of shares, but I didn't buy so many that I wouldn't add to it some more. And if this thing falls down to around the $5 range, I'm really going to load up on this stock and hopefully have a few thousand shares put away for the future. But a lot of these high growth names are just getting murdered right now. Like one of them is SoFi. You can see SoFi is headed straight down, and I think these high growth stocks that are just getting murdered right now are way overdue for a bounce. I probably won't buy any options in Curiosity Stream, but these things are ripe for a sharp bounce up. And if you play that right with some call options that are ending soon, you can make a killing. We got to be a little bit crazy to do that, and I am a little bit nutty, so I'm going to take a shot on one of these stocks, whether it's SoFi or maybe Palantir options don't play off super well, but these ones are starting to accelerate to the downside as well. There's some other stocks out there that I've been looking at that are, falling about as fast as SoFi. And man, if I can catch the bounce in one of those, that's going to be fantastic. But let me get into the only trade I made on the day. It is PTPI. Actually, I should say the only round trip I made on the day. I did end up buying Curiosity Stream, and I added to another position as well. But the only round trip I made was on PTPI. And let's actually go to the minute chart, and I'll show you what happened. Let me back this thing out a little bit. PTPI had that big gap up, followed through for a couple of minutes and rolled over. And once they start making this little hook, this is when, the saliva starts going down the side of my mouth, and I wait for that break of the 15-minute high, and we got it right here at $9.53. I put in my order at $2.45. Got executed at $2.48, and I sold out at $2.88. So right about here. And it only went just a little bit higher. It went to about $2.97 before it rolled over. But Dot from the Patreon followed me into this trade and actually did better than me. I believe he got a better execution. I think he maybe got it at $2.45, and he got out at $2.94, I believe. So you one-upped me on that trade. You better savor the flavor, because it's not going to happen again. Now, it probably will, because my executions are not the best, but just another decent trade. This thing just ended up kind of fading down the rest of the day. But man, one stock that I was really trying to get, and I ended up buying PTPI instead, was APVO. I don't know if you guys saw this one on the day. This one was also on my day trade list. And this thing, it's over $21 a share. I was watching this thing when it was right around 10. So just an absolute screamer. There's no way I'm delusional enough to think that I would have bought here and still have been holding on. That would have been nice, though. But I was only looking for this as a day trade, and this thing ended up breaking out and reversing, but I ended up getting into PTPI instead. So this probably would have ended up stopping me out. But man, this thing was just a rocket ship. Let's look at the daily chart on that one. I mean, screaming up almost all the way to the 200-period simple moving average. I didn't think there was any way this thing was going to end anywhere close to that. But man, absolute screamer on the day. If any of you guys got in on APVO, congratulations. Okay, everyone, that is all I have for this video, so I'm going to end it right there. But if you have any questions or comments on any of these stocks, or if you have any other ones you want me to take a look at, please leave it down there in the comments section. I will get to them as soon as I can. If you enjoyed the video, please hit the like button and subscribe to the channel if you haven't already. Thank you so much for watching my video all the way to the end, and until next time, take care, everybody.